where we dig into the research you send us to give you that critical shortcut. Today, we are strapping in.
We really are.
We're looking at an analysis of KULR Technology Group, that's KULR, and this company is trying something I have never really seen before.
It's a wild combination.
They're mixing this hardcore government-certified space engineering, the most risk-averse field there is, with maybe the most volatile financial strategy out there, the Bitcoin Treasury.
And that's really the core of it. The analysis reports we have aren't just pitching another small-cap stock. They're framing KULR as a hybrid asset, a potential small-cap rocket, specifically because it has these two distinct engines.
Two engines, okay.
Yeah, engine one is this cutting-edge NASA-certified technology, and engine two is that aggressive financial playbook, the one MicroStrategy basically invented, turning a corporate balance sheet into a massive leveraged bet on Bitcoin.
Okay, let's unpack that, because it's just such a bizarre combination. It's a contradiction, really, and that's what makes this deep dive so interesting. You have a company built on, like you said, rigorous, risk-averse engineering, suddenly diving headfirst into extreme financial volatility. So our mission today, based entirely on these reports, is to figure out how analysts are justifying this.
And justifying the upside.
Exactly. I mean, KULR is trading right now around $3.39, but the price targets we're seeing from analysts go as high as $10. That's an upside of, almost 190%.
And to get to that kind of explosive target, you have to look at the two pillars the reports are built on. First, you've got the core tech business, which is booming. I mean, it's grabbing market share in space and EVs and now AI. That's the foundation.
The real business.
The real business. And then you have the supercharger, the Bitcoin strategy, which is designed to create shareholder value completely separate from their quarterly profit and loss. The leverage.
Let's start with that supercharger then, because that's the part that feels so out of left field. This is what puts KULR in a category almost by itself, right? Aside from maybe MicroStrategy or a few crypto miners.
It is a formal, aggressive strategic commitment. The reports are very explicit about this. KULR has officially adopted the Bitcoin Treasury strategy. This isn't them, just dipping their toe in the water.
Right.
This is a core policy decision to allocate a huge chunk of their available cash, up to 90% of their surplus cash, directly into Bitcoin. They are treating BTC as their main Treasury reserve asset.
And we're not talking about a small amount here. The analysis reports, they're referencing data from late 2025, early 2026, and they suggest KULR has already piled up significant holdings. The value is reported at over $100 million.
Which for a company of this size is a tremendous amount of capital to have tied up in something that's not, building a new factory.
Exactly. So this is the friction point. The reports must address this. Why would a company that works on sensitive defense and space contracts take on this kind of financial risk?
The answer is really two words: leverage and re-rating.
Okay, explain that re-rating idea. If they wanted to hold cash, they could just hold T-bills or something safe. What's the specific advantage of holding $100 million in Bitcoin instead?
It's all about creating what they call BTC yield. So when a company takes its cash, which usually earns, next to nothing, and puts it into a hyper-growth volatile asset like Bitcoin, the market starts to see the stock differently.
How so?
It's not just an operating company anymore. It becomes a vehicle to invest in Bitcoin, but with corporate leverage. This structurally decouples the stock price from just being about, say, their Q3 sales figures.
So as a shareholder, you're getting a potential return from two different places. You've got the fundamental growth of the tech business, and you've also got the potential appreciation of the Bitcoin they're holding on the books.
You got it. It turns the balance sheet into an active investment vehicle.
Yeah.
If the price of Bitcoin doubles, KULR's book value just explodes, creating massive shareholder value that has nothing to do with their core business.
But, and this is the big but,
It's a huge but. This strategy also opens them up to immense scrutiny.
I have to jump in here. What do the analysis reports say about how their clients see this, their government and industrial clients? Doesn't this look incredibly irresponsible for a defense-adjacent company? Does it jeopardize those contracts?
That's the key question, right?
Yeah.
The analysis suggests that so far they've managed to keep the core operations ring-fenced from the financial strategy. KULR's argument, which is cited in the reports, is that the Bitcoin comes from surplus cash only.
Money they don't need for day-to-day stuff.
Exactly. Money not needed for R&D, operations, or contract work. They're essentially saying, look, our reliability and our certified tech, that's paramount, but our extra cash needs to work harder for our shareholders. Analysts see this as a very high-risk but sophisticated attempt to attract a totally new class of investor into an industrial stock.
The crypto bull.
The crypto bull, yeah.
Okay, that makes the $10 target suddenly seem plausible, but only if that super catalyst really fires. So let's shift gears. Let's look at the engine that actually keeps the lights on, the core business. Because the reports confirm that the actual business is also seeing explosive growth, completely independent of Bitcoin.
It is, and this is where you really have to dig into the technology itself. The company's operational performance is what gives them the confidence to take these aggressive financial steps. We're talking triple-digit growth. That suggests huge market penetration.
Let's get into the numbers. The analysis pointed to Q3 2025 revenue of $6.8 million. But the key figure isn't the total, it's the growth rate. 116% year over year.
116%. That's not just an improvement, that's explosive traction.
So where's it all coming from?
It's coming from the fact that their technology is becoming essential. And their customer list, it's the definition of high profile. That alone validates their product. They've got contracts with NASA, which is, the gold standard for certification in space safety and thermal management.
And the reports also mentioned contracts with a prominent private U.S. space company.
Right.
Which, reading between the lines in these reports, it sounds like a major player. If a SpaceX or a Blue Origin is using KULR's tech for their rockets, that's a massive seal of approval. It's an immediate sales pitch to everyone else, from defense to automotive.
That is their critical moat. Their specific technology is the thermal runaway shield.
Yeah.
Should probably spend a second on what that actually is.
Yeah, break that down for us. Thermal runaway. It sounds bad.
It is very bad. Think about lithium-ion batteries, the kind that power everything from satellites to
Teslas.
To Teslas, exactly. They have this nasty habit of going into what's called thermal runaway.
Yeah.
It's basically a chain reaction, a cascade failure that results in a violent, catastrophic explosion.
So their tech is basically an explosion-proof shield for high-power batteries. But what makes their solution special? Aren't there other cooling options?
It's the material science. KULR uses passive thermal management, usually with carbon-based fiber tech that's incredibly lightweight and durable. Passive systems are key here. They work without pumps or complex machines that can fail.
Right, less moving parts.
Way less. Their shields essentially isolate a single battery cell, stop the thermal event, and contain it before it spreads to the cell next to it. In a place like space, where every gram matters and failure is not an option, that's crucial. NASA's certification means this stuff can handle the vacuum of space and the intense vibrations of a rocket launch.
I see. So they're not selling a complex machine that can break. They're selling a passive material that's a certified barrier against total disaster.
Exactly. And the need for that barrier is just skyrocketing, which explains that 116% revenue spike. The reports really highlight the demand across three huge sectors. First, space, where it all started. Second, electric vehicles, which are demanding bigger, faster charging batteries, which means more fire risk.
Okay, space and EVs make sense. What's the third?
The newest and maybe biggest driver is the AI server market.
AI. Why AI?
AI servers, these high-density computing clusters. They generate an unprecedented amount of heat in a very small space. The racks are just packed with powerful chips and more backup batteries. All that heat needs a robust, lightweight, and super reliable thermal solution.
And KULR's space tech is perfect for that.
The report suggests it translates perfectly. They're solving the extreme heat problems for the next generation of data centers. So they're not just in the rocket business anymore. They're in the infrastructure business for the entire AI economy.
That puts the whole operational side into perspective. The $10 target isn't just a fantasy. It's rooted in them capturing what could be a mandatory market share in 3 hypergrowth areas. But a real deep dive needs a reality check.
It does.
We've got this phenomenal growth and a supercharged balance sheet. But this is a high-risk, high-reward play. The reports were pretty clear about the downsides.
Yeah, you have to look past that 116% growth figure and look at the bottom line, profitability. Because while KULR is growing incredibly fast, they are still running at a loss.
Right. The Q3 net loss was about $6.97 million, which almost perfectly cancels out their $6.88 million in revenue. That's a huge operational burn. Is that sustainable?
The reports frame this not as a failure, but as a calculated strategic investment. The loss is tied directly to the heavy spending they need to do to grab market share in those 3 massive sectors. They're locking in contracts, scaling up production, and investing in sales teams to capture the AI, EV, and space markets while they're still up for grabs.
So they're choosing growth over profit for now.
They're intentionally sacrificing short-term profitability to build a dominant position for the long term. That's how the analysts see it.
So that's the operational risk. What about the financial one?
Well, the second risk, and you could argue it's the much bigger one, is the Bitcoin Treasury strategy. It is the definition of inherent volatility.
And volatility is poison for a stable industrial stock normally.
We have to really emphasize this for you. The reports state clearly that the stock price's correlation to Bitcoin will be high. If the crypto market goes through a major sustained crash, which is always a risk, KULR's balance sheet takes an immediate, severe hit. That could lead to equity impairment and a massive sell-off.
So that confirms it. It's a high-risk, high-reward play, period. The upside is huge, but the downside is directly tied to the whims of an asset they don't control at all.
Right. So if you're looking at KULR, you are making a very deliberate, leveraged bet on two disconnected trends: the success of their thermal safety tech and the long-term price of Bitcoin.
It's a bundled exposure. You can't have one without the other.
Exactly. It creates a really unique profile in the small cap market.
Okay, so let's synthesize this. Let's look at the market view, the technical levels the reports mention. We know the current price is floating around $3.39. What are the technical guideposts that analysts are watching?
The reports lay out some very clear markers. On the downside, there's strong support identified in the $3 to $3.15 range. That seems to be the technical floor that analysts think should hold, just based on the operational momentum and the value of their tech.
And on the upside, what's the key barrier they need to break to confirm those aggressive targets?
The critical resistance level is $4. The reports are very specific about this. If they can clear $4, it signals a major shift in market sentiment. If KULR can hold above 4, the technical analysis suggests the gap fills quickly, leading to a rapid move up towards $6.
And $6 would then be the launching pad for those higher targets, like 8 or 10.
Yes. The analyst consensus cited in the reports is a strong buy, and it's based on that dual justification we've been talking about. The targets range from $8 up to that crucial $10 mark, and that $10 valuation is where the reports see the stock settling once the market fully prices in both the triple-digit growth and the leverage from the Bitcoin Treasury.
Which brings us right back to where we started. Is KULR the next small cap rocket? The analysis suggests the potential is there, but it's conditional.
I mean, we've been using the dual engine metaphor, and it really fits. Engine 1 is robust. It's delivering that insane revenue growth in a mandatory market for space, AI, and EVs. That engine is built on certified, reliable tech.
And engine 2, the Bitcoin Treasury, that's the afterburner. It's the high-octane fuel that provides the leverage to hit a target like $10, maybe even before the core business is even profitable. It's an acceleration factor, a supercharger.
So the final takeaway for you is this. KULR is compelling, but not just for tech investors or crypto investors. It's for people who are bullish on the combination of the two. It offers this unique, high-octane play on two huge and usually disconnected trends at the same time. It's a way to bet on space tech and digital currency in a single stock.
And that inherent tension makes it a fascinating case study. Based on the analysis report's breakout signal at $4 and this heavy reliance on Bitcoin, we have to leave you with a question to think about. If KULR actually pulls this off, if they use this strategy to hit that $10 target, does this fundamentally change how small cap tech companies raise money and value themselves from now on?
Is the BTC Treasury the new IPO? Is it a way to create explosive growth potential that traditional financing just can't match?
That decision to use extreme financial volatility to fund ultra-stable engineering, that's the core revolution the reports suggest could be happening here.
It could reshape the entire landscape.
Absolutely.